If you only watch one update today, watch this whole video. Banks, clearing systems, and large financial players are moving in ways you might not have seen before, and that movement could change how and when Iraqi dinar holders worldwide get information, access, or even the possibility of exchange windows. Right now, community chatter is high. Official channels are quiet, and a mix of operational activity and cautious statements is creating a charged atmosphere. In this report, we'll walk you through what banks aligning systems actually means in practical terms, why many people are talking about a Monday timeline, what signs to look for that matter, and the real-world steps ordinary holders, banks, and financial institutions must take before any change becomes operational. I'll speak in plain English, step by step, so whether you're new to this topic or you followed it for years, you'll understand the practical implications, not the rumors. By the end of the script, you'll have a clear picture of the possible scenarios, the technical steps banks must complete, the checks regulators need to finish, and sensible actions you might consider. Stay with me through every section because missing one detail could cause confusion later. And I'll repeat the most important takeaways at the end so you can leave the video with a simple action plan. Right up front, let's define what people mean when they say banks are aligning systems. At its core, aligning systems means banks, whether local Iraqi banks, regional clearinghouses, or international partner banks, are updating, testing, and synchronizing the software, messaging standards, and compliance rules that allow money to move between institutions. That includes making sure SWIFT messages, internal transaction codes, account identification, and anti-money laundering filters are all working with the same settings. It also means that settlement windows, cutoff times, and operational protocols are coordinated so that when an official change happens, transactions don't get lost, flagged, or rejected. This is not a quick overnight job. It often requires coordinated testing sessions, primary and backup server checks, reconciling test trades, and simulating high volumes. When you hear talk of alignment, picture big banks running synchronized dress rehearsals. Every file format, every confirmation message, and every manual override has to be tested. That level of technical detail explains why people watch for signals from bank operations and service providers as potentially meaningful. Why would banks move to align systems at once? There are several practical reasons. One reason is to reduce operational risk. When many institutions make a change, uncoordinated systems can cause delays, dropped payments, and compliance alerts that stop flows of money. Another reason is to allow for an orderly and audible transition. Regulators and internal risk teams prefer a controlled rollout that can be traced and reversed if necessary. A third reason is to prepare for new exchange or settlement procedures that might require updated account mapping or different reserve requirements. Finally, coordination often reflects pressure from central authorities or large clearing banks who set technical specifications. If many players are suddenly aligning at the same time, it can indicate they expect a common trigger, an announcement, a regulatory approval, or scheduled operational window that makes coordination necessary. Remember, alignment is about reducing operational friction and avoiding costly mistakes when volumes rise or when new rules are applied. People keep saying Monday timeline. Why Monday? In banking and global finance, weekdays and especially Mondays are preferred for operational windows for a simple reason. Staffs are in their normal working patterns, settlement cycles reset following weekend closures, and global counterparts in different time zones can coordinate. Operational changes that need human oversight are avoided on Fridays because unresolved issues would stretch into the weekend. By choosing a Monday, institutions ensure the maximum number of staff, vendors, and regulators are available should manual intervention be required. That said, a Monday timeline in chatter usually means people expect key system changes, notifications, or activation windows to fall at the start of the business week. It does not guarantee anything, but it is a practical pattern. When you combine Monday planning with the notion of synchronized bank systems, the picture is a planned operational window where checks, confirmations, and reconciliations can be monitored and adjusted in real time by all stakeholders. Let's talk about what operational readiness looks like from a bank standpoint. Operational readiness is a checklist that includes updated and tested software releases, reconciled master data for customer accounts, validated messaging standards for cross-border files, cleared compliance and AML rule sets to accept or flag transactions, liquidity ready in correspondent accounts to settle moves, train staff on new procedures, and rollback plan if unexpected issues arise. During the readiness phase, banks run test files that mimic actual transaction flows and invite counterparties to confirm receipt, clearing, and settlement times. That testing verifies that transaction IDs, reference numbers, and account mappings match so that live payments do not bounce or get misapplied. Banks will also coordinate with vendor providers, the companies that host core banking, messaging hubs, or Swift gateways, because those vendors operate large shared systems where mistakes can cascade. So when sources refer to alignment, they often mean these readiness checks are either ongoing or recently completed. Community channels and watch groups often interpret small operational signals as proof that something big is imminent. That interpretation can become a self-reinforcing loop. One credible operational detail gets shared, then repeated across channels as verification, which prompts more attention and more leaks of operational chatter. It's crucial to separate two things: verifiable operational activity confirmed by banking professionals and speculative interpretations that assume outcomes. Real operational activity can include scheduled maintenance notices, test confirmations, or vendor change logs. Speculative interpretations assume the purpose of those actions. For example, that the work is specifically for a revaluation or an exchange window, and sometimes that leap goes beyond what the facts show. If you follow this story, watch for direct operational signals, system maintenance windows announced by banks, test confirmation messages, or clear changes to settlement rules. Give less weight to speculative conclusions until operational signals are corroborated by multiple credible indicators. There's another layer to consider: the role of regulators and the central bank. Regulatory approval or guidance is often the final gatekeeper for any currency or settlement change. Central banks set legal frameworks for exchange rates, account rules, and reporting requirements. Even if commercial banks are ready technically, regulators can delay or alter timelines for reasons such as market stability, foreign exchange reserves, or political developments. In many jurisdictions, central banks coordinate with finance ministries to set calendars for policy actions that might have macroeconomic implications. That means that for any real change involving a currency's exchange environment, both operational readiness at banks and regulatory approvals must line up. If you are watching for a Monday activation, remember that regulators could still hold the decision until they are satisfied with liquidity conditions, international partner readiness, or political timing. What would a typical activation look like if all pieces aligned? A typical activation might begin with a short official notice to participating banks and authorized counters, sometimes called a go-live confirmation or a notice to operate under new conditions. That notice may be followed by windows for authentication and exchange operations, where designated accounts and redemption channels accept or record new exchange values. Operationally, banks might open designated settlement periods where files are accepted, validated, and cleared. At the same time, regulators could issue public or private guidance to control market messaging and prevent destabilizing speculation. Typically, institutions will run closely monitored settlement cycles for the first few days, and they may enforce limits per account or per transaction while monitoring system logs. If that staged approach is followed, the earliest days are usually cautious and tightly controlled to prevent errors and market shocks. Now, let's discuss what alignment does not guarantee. Alignment does not automatically mean a revaluation has been decided or that exchange windows will open for the public immediately. Alignment is a technical and operational step. It prepares the infrastructure to handle a change if one is authorized. Think of it like setting a runway and fueling the planes. The planes are ready to depart, but the final takeoff permission still rests with decision makers. In practice, Many past alignment activities turned out to be routine upgrades, compliance work, or testing unrelated to a particular market rumor. So while alignment is necessary for any big operational move, it is not sufficient to confirm outcomes. Responsible viewers should interpret alignment as a readiness signal, not a guaranteed event. If you're an IQD holder wondering what to do next, here are practical steps you can consider. First, avoid making large, irreversible financial decisions based solely on unverified rumors. Second, double-check the credentials of any financial intermediary or redemption center claiming to offer guaranteed exchange at premium rates. Third, keep records and documentation for your bank accounts and holdings. Accurate account details reduce the chance of misapplied transfers. Fourth, contact your bank or an official financial professional for their published guidance rather than relying solely on community posts. Fifth, consider a conservative approach. Prepare to act when credible. Verifiable notices are issued and when institutions publish confirmed operational guidance. Finally, maintain calm and a fact-checking mindset. Scams and misinformation often increase during periods of high community expectation. Let's look at the possible scenarios if a Monday activation were authorized. Scenario A phased activation occurs, where designated banks and redemption centers operate under an initial window with limits and strict verification, allowing holders to exchange in a controlled manner. Scenario B, a limited pilot activation happens with only institutional-level changes, meaning retail holders may not have immediate access. Scenario C, alignment was preparatory for something else, like a policy update or a systems modernization, and no exchange window or revaluation occurs. Scenario D, unexpected complications arise and regulators delay activation to avoid market instability. These scenarios highlight that even when systems align, the real-world path forward can vary widely. Preparing mentally and financially for multiple outcomes reduces risk and prevents panic-driven decisions. Now, let's discuss common pitfalls during such transitions. One pitfall is trusting unverified third-party operators who claim exclusive early access to exchange windows. These are frequent in rumor-rich environments and can be scams. Another pitfall is acting on social media confirmations that lack operational details, such as time-stamped test confirmations or bank-issued bulletins. A third pitfall is misunderstanding the role of correspondent banks. Sometimes international banks appear to be ready but are only updating systems for compliance reasons unrelated to any exchange window. A fourth pitfall is not understanding local legal requirements for currency exchange. Avoiding these pitfalls requires verifying information through official bank channels, regulatory statements where possible, and trusted financial advisors. For content creators and channels covering this topic, responsible reporting matters. Too often, sensational headlines and overstated certainty amplify risk and create false expectations. Responsible reporting should label what is confirmed and what is speculative. Avoid publishing private or unverifiable documents and emphasize operational reality over rumor. When reporting on alignment or timelines, make clear distinctions between technical readiness, regulatory approval, and market activity. Encourage viewers to check official bank notices and to consult licensed professionals for advice. This approach protects the audience and builds credibility for the channel, which matters when sensitive financial subjects are in play. Let's put the current chatter into a broader economic context. Iraq's banking sector has been working through reforms, capital requirements, and modernization efforts for several years. Upgrades to infrastructure, partnerships with international advisors, and occasional regulatory shifts are part of a long-term effort to make the system more transparent and resilient. In that context, banks aligning systems can be a sign of progress and modernization, regardless of any single operational event, like an exchange window. Modern banking systems require continual upgrades. Aligning for a potential event may also serve future stability and interoperability goals. Viewers should keep in mind that system updates can benefit long-term banking operations even if they do not immediately translate into the short-term outcomes many hope for. Political dynamics also play a heavy role in timing. Elections, budget deadlines, and diplomatic negotiations can all impact central bank decisions and the timing of financial policy. If key political milestones are pending, regulators may choose to postpone public moves to avoid triggering market reactions. Conversely, if political leaders coordinate with central banks to advance economic objectives, that could hasten action. Since political calendars are often unpredictable, they add another layer of uncertainty to any Monday timeline. Watch for clear political signals, official statements, parliamentary decisions, or budget confirmations that could clarify the regulatory posture. If you're tracking signals, here are practical ones to prioritize. First, bank-level maintenance windows posted on official bank sites or direct client notifications. These can be credible indicators of technical work. Second, official notices from central bank or finance ministry channels, even private circulars to banks, are meaningful if confirmed. Third, communications from major correspondent banks or payment network providers that change operating schedules or test confirmations. Fourth, public statements from regulatory officials or credible institutional press. Fifth, sudden increases in authenticated test messaging between banks that are documented and timestamped. Prioritize these signals and treat social media buzz as secondary until it's matched by at least one primary operational indicator. Now let's talk about the human element during an activation window: staff, training, and escalation protocols. When systems align and an activation occurs, trained staff are essential to monitor flows, resolve exceptions, and follow escalation protocols for suspicious or failed transactions. Escalation protocols define who gets notified, when, and how issues are resolved. Staff must be trained in both the technical steps and the customer-facing communications to keep account holders informed and to prevent panic. If banks have run thorough dress rehearsals, staff should be better prepared for real events. If the rehearsals were superficial, though, human errors and confusion can compound technical glitches. That's why many institutions emphasize training as part of readiness activities. Liquidity management is a critical behind-the-scenes factor. Banks must ensure they have sufficient liquidity, both in local currency and in correspondent currency accounts, to handle increased settlement needs. If an activation requires a significant increase in foreign exchange transactions, correspondent lines and reserve requirements become crucial. Banks often pre-arrange short-term liquidity facilities with partner institutions to ensure smooth settlement. If correspondent banks are cautious, they might impose limits or additional checks that slow processing. That means even if local systems are aligned, international settlement partners can be a limiting factor. Watch for signs of confirmed liquidity arrangements or temporary settlement limits shared by participating institutions. For holders outside Iraq, cross-border logistics matter. International holders typically depend on designated redemption centers, correspondent banks, and local banking partners to facilitate exchange. Cross-border transfers must pass through multiple checkpoints: the originating bank, correspondent banks, clearinghouses, and the receiving institution. Each checkpoint can add time and compliance checks. When operational alignment is announced, it must cascade through these checkpoints. That cascading process is often why authorities prefer staged rollouts. They can limit initial volumes and closely monitor international settlement. If you are an international holder, be prepared for paperwork, identity verification, and possibly staged access depending on how authorities manage the initial windows. Risk communication is another key factor. During periods of heightened expectation, clear and timely communication reduces panic and prevents fraudulent exploitation. Responsible institutions publish clear, plain English guidance for customers, explain limits or timelines, and provide steps for verification. They also warn against unofficial intermediaries and outline how customers can verify legitimate channels. If you see communications that are vague, contradictory, or push immediate payments to unknown third parties, treat them as suspicious. Legitimate institutions will use established channels to communicate and will not pressure customers into rapid, irreversible actions without documentation. Now, let's consider the psychological element. Why news like this spreads so fast? Currency speculation stories tap into hope, frustration, and the promise of a sudden windfall. The longer a community waits for a potential change, the more potent any small signal becomes. That's why emotional logic can override critical thinking during high expectation events. To stay grounded, remind yourself of the difference between hope and verified fact. Use a checklist, identify the claim, find an official confirmation, verify with more than one credible source, and consult trusted financial professionals. Keeping this routine habit protects you and keeps decisions rational. What should smaller redemption centers and local exchange desks be doing now? Operationally, they should confirm their authorization to participate with central authorities, verify their technical capabilities to process updated settlement messages, and ensure their own compliance and KYC systems are in order. They must liaise with sponsoring banks and confirm cutoff times and transaction limits. Many smaller operators also need to coordinate staff availability and security measures to manage client appointments if a window opens. If they haven't secured these permissions and technical confirmations, they might be excluded from initial windows, which is why verification matters. If you want to stay informed during this evolving situation, follow a layered approach. First, subscribe to official channels of your bank and the country's central bank and set alerts for new circulars. Second, watch for direct client notifications if you have accounts with institutions that might participate. Third, monitor reputable financial news outlets for confirmed reports. Fourth, use community channels for early chatter but treat them as leads to verify rather than facts. Fifth, keep a personal file of transaction records and communications in case you need proof of holdings or to resolve disputes later. This layered approach balances speed with responsibility. Finally, here are the closing takeaways you should remember. Alignment of banking systems is an important technical step, but it does not by itself guarantee public access to exchange windows or a revaluation. A Monday timeline is plausible for operational reasons, but not guaranteed. Regulators, liquidity, and political timing are decisive. If you're a holder, verify any claim through official bank notices, avoid unverified intermediaries, and prepare documentation and patience. For creators and reporters, prioritize verified information and clear disclaimers. And for everyone watching this space, focus on confirmed operational signals, such as bank maintenance notices, regulator circulars, and authenticated test confirmations, rather than speculation. We'll keep monitoring the situation closely and bring verified updates as they become available, summarizing what you need to know in simple, practical steps.